Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that has really been in the news recently because they've been doing extraordinarily well, and that stock is Nvidia. And we can see over the last year, Nvidia is up over 100%, while the rest of the market is up only 3%. By far, some of the best stock performance we've seen over the last 20 to 30 videos over the last year for a company. And most of this growth came recently, as we can see right here, when they announced earnings. I believe it was on May 24th. Their stock popped from $300 per share to $380 per share, at one point hitting $412 per share. So it increased $100 in one trading day pretty much. So really impressive growth, and we're going to get into some of the recent news that came out surrounding Nvidia that contributed to this stock price increase. I'm going to look at their financial statements to get a better look at their revenue growth for each of their segments, and then also for their earnings growth. And then lastly, I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Nvidia. I'm going to compare them to some of their competitors in the industry like AMD and Intel, and then I'm just going to analyze their company's profit margins and everything else. So stay tuned for all of that. Right here, this is the first article I want to look at. This is called Nvidia Nears Elite $1 Trillion Market Cap Club of Apple, Microsoft, Alphabet, and Amazon. And we can see they point out here that the chip maker saw its shares surge 26% on Thursday. That was when they announced earnings on May 24th, bringing its market value to just under $1 trillion mark at about $950 billion. It was at around $755 billion of market capitalization at the close of trading on Wednesday. And then if I scroll down here, they point out that all eyes are on Nvidia because they forecasted $11 billion in sales for the second quarter of their fiscal year 2024. Just for some context, as we'll see later on in the financial statements, I'll give you a quick sneak peek right now. Their revenue for the first quarter was $7 billion. So if they're forecasting $11 billion in sales for the second quarter, that would be a massive increase in sales for the second quarter of their fiscal year. All of this is coming from high demand for their graphics processors that power AI applications like the ones used at Google, Microsoft, and for ChatGPT maker OpenAI. And this forecast essentially blew away Wall Street and all of their expectations and projections for Nvidia's second quarter. The customers right now are racing for LLMs, large language models, which are mainly powered by GPUs like the ones that Nvidia creates. And right here they point out that it was up, their shares are up about 108% for the year as of Thursday's session when their stock price increased. And their sales guidance is up more than 50% above the $7.15 billion that analysts had anticipated for the quarter. So definitely very interesting news for Nvidia there. And then another article I wanted to look at basically talked about how Nvidia's success might be really bad news for some other chip makers like Intel. In particular, right here they point out that Nvidia's stock performance saw a boom and sent shares of conventional CPU manufacturers such as Intel down in Thursday trading, but a possible reorientation toward conventional GPU powerhouses like Nvidia as well as AMD could be at the expense of CPU-oriented firms such as Intel. In particular, they point out right here that Nvidia's stock surge really pushed a lot of semiconductor names up, particularly firms that were specializing in artificial intelligence favored chips. But what was missing from that broader rally was a rally from Intel, which has been struggling even before the artificial intelligence boom. They point out that Nvidia shares went up 24%, whereas AMD's increased 11%, which is also really good. And both Nvidia and AMD specialize in discrete standalone GPUs. There's also another company called Marvell, which increased 7.6%. Broadcom increased 7.25%. And they benefit from their exposure to the cloud computing market as well as to potential artificial intelligence applications. Marvell partners with companies like Google, Meta, and Microsoft, and Broadcom has been developing technologies to link AI supercomputers together. Shares of conventional computer chip firms dipped though, like Intel, which closed down 5.5% late in that Thursday's trading. And then GPUs have been enjoying surging enterprise demand as startups and established tech firms scramble to build out AI platforms. GPUs are essentially the brains behind the large language models and other AI technologies, helping to power AI's ChatGPT and Google's Bard. Instead of millions of CPUs, you'll have fewer CPUs, but they will be connected to millions of GPUs. That's what the CEO of Nvidia said in their recent earnings call. And historically, that's been the opposite. It's usually been a lot of CPUs that are connected to few GPUs, but now it's going to be a lot of GPUs that are connected to a few CPUs, which is definitely better for companies that are more AI centered and GPU centered like Nvidia and AMD. Not so good for other CPU centered companies like Intel. So very interesting dynamic here. Obviously, there's a shift happening in the tech market due to the recent artificial intelligence boom, and it's obviously having a very positive effect on Nvidia's stock price. Then right here, this is their income statement. We can see they're comparing their results for the first quarter of 2022 to 2023. Year over year, revenue actually decreased about 13% from $8.2 billion to $7.1 billion. And if we were to break this revenue up, I know you can't really see it on this income statement, but their data center revenue was about $4.2 billion of the $7.1 billion, and that was up 14%. Their gaming revenue was up 38%, and it made up about $2.2 billion. Professional visualization, that's like visualization models, that was about $295 million, and it was down 53%. They also do something in automotive, particularly like self-driving vehicles, and that came out to be about $296 million of this revenue, and that segment of their business was up 114% year over year, so very impressive. And those are the main segments of their business that made up this $7.1 billion in revenue. For net income, we can see although revenues decreased, net income increased by about 26% from $1.6 billion to $2 billion of bottom line net income. So very impressive net income growth for Nvidia. Right here, this is their balance sheet. We can see that they're comparing January 29th to April 30th. Total assets are up from $41 billion to $44 billion. Most of their business is financed by equity. They have $24 billion of total equity, and of that, they have about $12 billion of retained earnings, which they can use to either reinvest back into the company, repurchase shares of common stock, or pay out dividends to their shareholders. And lastly, right here for their cash flow statement, we can see they're comparing the first quarter of 2022 to 2023. Operating cash flow increased from $1.7 billion to $2.9 billion. And then we can see they paid out about $100 million worth of dividends, which is pretty consistent year over year. They paid out about $100 million in the year before as well. So not really prioritizing returning value back to shareholders. Obviously, most of their operating cash flow went elsewhere. And we can also see that they have a lot of their earnings went straight into the retained earnings, and they didn't really pay much of that out in dividends. So it seems like they're not really prioritizing returning value back to shareholders by repurchasing common stock or through paying out dividends. At the moment, it looks like they're mainly reinvesting back into the company. We can see they didn't repurchase any common stock in the first quarter of 2023, although they repurchased about $2 billion in 2022. So they prioritized returning value back to shareholders more last year, not so much of this year. Okay, so right here, this is a discounted cash flow model to figure out the intrinsic value per share for Nvidia. Yahoo Finance had a very strong projected growth rate for Nvidia at 33% for the next 5 years. They had $3.8 billion of free cash flow in their most recent full year. After subtracting debt on their balance sheet, they have about $3.4 billion of cash, and they have about 2.4 billion shares outstanding. That puts their intrinsic value per share at around $70 per share, which means that at the current share price, they're not trading below intrinsic value per share. They're trading way above it, about 5 times their estimated intrinsic value at $380 per share. So based on these estimates, that would mean that they are not trading at a good buying price from a value investing perspective. Obviously, there are a lot of things to consider, a lot of moving variables when you're trying to decide whether or not to buy into a company. This isn't the only thing you should consider, but these are the estimates from Yahoo Finance. And so right here on the right-hand side, I compared them to their competitors, AMD and Intel. We can see that across the board, Nvidia has the best profit margins. They have a 56% gross profit margin, the highest net profit at 16%, and the highest return on assets at 10%. They are trading currently at a pretty high price to earnings ratio of around 200 times earnings, and they do pay out a very small dividend. Basically, Dividend yield is 0.08%, so for every $100 you invest into Nvidia, you're getting paid about 8 cents per year in dividend, which is really nothing. For Intel, it's a little bit higher. For every $100 you invest in Intel, you're getting paid about $5.52 per year in dividends. But also, as we saw from the video I recently made about Intel, Intel stock is down quite a bit, whereas Nvidia's stock is booming and they're about to cross a $1 trillion market cap. So you're not really depending on the dividend to get return for being an investor in Nvidia. You're mainly depending on the share price, and that has not disappointed, as you can see. So based on this, if you're comparing them based on a profit margin perspective, you definitely give it to Nvidia. Based on a dividend, you probably want to give it to Intel, as they're the company that pays the highest out of these three. And then lastly, I wanted to compare Nvidia to some of the other companies we've talked about in past videos. Nvidia, as I just pointed out, in terms of share price to intrinsic value, is trading at about 5 times their current intrinsic value per share. It's 70, and they're trading at around almost $400 per share. So that is definitely a bit of an overprice compared to the other companies we've looked at. So far, Google, Alibaba, GE, and Etsy are the only companies we've looked at that are trading below intrinsic value per share. For growth rate, Nvidia actually shoots to the top of the list with their 33% estimated growth rate from Yahoo Finance. That pushed Chipotle out of the first place spot, which was our previous first place holder with 26%. In terms of profitability ratios, we can see Nvidia had a 56.93% gross profit margin, good enough to get them into the 8th place spot on our list. Adobe had the highest gross profit margin at 89%, but for net profit, we saw Nvidia had a net profit margin of 16%, not good enough to get them onto the net profit table. Microsoft holds a number 1 spot there at 36% net profitability. And then lastly, for stock performance over the last 5 years, Nvidia shoots to the 3rd place spot with a 449% return over the last 5 years. Very impressive growth for Nvidia. We can see that AMD is also up there, one of Nvidia's main competitors. Their stock price has increased about almost 700% over the last 5 years. Tesla holds the number 1 spot at 1,000%. So all in all, comparing them to the other companies we've looked at, it looks like Nvidia is pretty competitive. They have a obviously really good stock price return over the last 5 years. They have a very good gross profit margin. Net profit margin could be a little bit better to get them onto this table, but that doesn't really mean that they're a bad company. Obviously, profit margins are going to differ from industry to industry. For growth rate, they had the best projected growth rate from all the companies we've looked at so far, but according to the discounted cash flow model, they are currently not trading below intrinsic value per share based on these estimates. And then also comparing them to other companies in their industry, they have what looks to be the best profit margins. So Nvidia is definitely a very hot stock right now. A lot of people are talking about it. Obviously, this recent increase in the share price has got a lot of people talking, and they're about to cross the $1 trillion market capitalization. Let me know in the comment section down below what you guys think of Nvidia. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.